Hi there. Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and not a bad day of trade. If you look at the global markets, they're shaping up okay. And because of the fact that the fears of national lockdowns have been dissipated a bit, I think we may not have a bad end to the week. But let's wait and watch how it shapes up. First, what the US markets did. Since I'm saying that the US markets did okay, let's just shape that up. So about 140 odd points for the Nasdaq, and frankly, in this rebound that we've seen, uh, the index which was impacted the most because of the yields moving up has actually recovered the best. So good going for the Nasdaq yesterday, but Dow and the S&P also did reasonably okay, and the futures, as I see them, are actually doing reasonably okay for themselves too, marginally in the green. So no great deviations from there. The other bit is that not just for CBOE VIX, but even for the EM and the Asian pack, volatility seems to have ebbed a little bit, and that should actually aid a little bit of sentiment, right? So this is, I mean, of course, out here it shows the Nikkei volatility index. If you look at the Nifty or any of the other indices, Kospi, Hang Seng, etc., volatility gauges in Asia have fallen near about 14-month lows. Yesterday, India VIX was up about 30 odd basis points at 20.3 or 4 or thereabouts, but that's hardly anything. I mean, so essentially volatility is staying low, which is good. Remember a few days back I showed you that the bets on the US volatility moving up have actually, or the bets on the US volatility staying low have actually decreased the most. But for now, even globally and in the Asia Pacific region, VIX is not a problem, and which is actually a great thing. What is Asia doing today? What is SGX Nifty doing today? Marred with a little bit of red is Asia. So you across the board, you see a little bit of red out there on the screen. Nothing too worrying really. Indices maybe up and down and marginally flattish as well in select places. But I don't think there's a cause for worry just looking at the global markets picture. Quickly, let's just put in the dash of the SGX Nifty as well to just get a sense of what we might be doing. Flattish, so about 11 odd points. And therefore, this firmly puts in what I'm trying to say on the trade setup into focus, that I think people would ignore the index and look at bottom-up ideas. So I think the broader market bottom-up stock picking is probably a better strategy than betting on cyclicals at the moment. I think a lot of people are tempted to bet on cyclicals, but if you just look at HDFC Bank over the last, say, 10 days, it's moved the gamut from 1500 to 1425 or 1435 and back to about 1450. The high quality cyclicals are not being able to perform. So cyclicals is out of the way. Stick to broader market bottom-up stories. I think PM Modi in the meeting yesterday ruled out a national lockdown, which should come as a big relief for people, really. I think everybody was anticipating that. And while the belief was that it will not be a national lockdown, but individual states could do that, I would reckon if PM Modi is saying so, that let's rule our lockdown out, the BJP ruled states would largely not do a lockdown, and that should actually ensure that the sentiment is not disrupted. Information technology and specialty chemicals would probably continue to do well, but I somehow believe that real estate may be the dark horse for the short term. A lot of institutional desks are talking about how real estate stocks are seeing buying from some fairly select buyers. So let's wait and watch for that. And very serious traction in ethanol beneficiaries. Local desks, small-time brokers are seeing HNI clients pile on them. Yesterday, we saw Balrampur Chini hit fresh highs. Raj Industries was up about 5-6% in trade yesterday. We're seeing some of the other sugar stocks do that too. So watch out for this pack. The ethanol beneficiaries somehow seem to be garnering a lot of attention. A couple of other things. I don't think Macrotech's individual subscription should be considered as a barometer of how the sentiment is around the real estate index. If anything, some people might be shying away. There's a WhatsApp forward doing the rounds, I must say, which speaks about how there is a possibility that that Rakesh Jhunjhunwala has invested in this IPO, and I've gotten this forward from a number of people. So I don't know how to trust this, but yeah, I mean, this is the forward, viewers. So just be careful if you actually get this. I mean, please verify this, and there's no reason why, even if this is true, that Lodha IPO will do well. But yeah, this is the long and short of what we learn about Lodha IPO, which is now Macrotech, that the subscription isn't looking as strong. Let's wait and watch how the last day shapes up. What are the stocks that one should watch out for? And now keep in mind, viewers, IT remains in focus for more reasons than one. I'm not showing what a local broker had said, but essentially their study seems to suggest that on Naukri.com, the maximum posts are for IT hiring. So therefore, if IT companies are hiring thick and fast, it is great news. You have to keep in mind, because it will get forwarded to you as well. You have to keep in mind that may also be on account of attrition. I think most brokerages are saying that IT companies are facing serious attrition, and that could be the other factor why job listings may be high. However, in all probability, IT may probably anyway still continue to do well. What are the other stocks that we should keep in mind? IT remains in focus. Infosys. I think ArcelorMittal has announced a strategic long-term collaboration with the company for digital transformation. It, of course, also strengthens the presence of Infosys in Europe. So it's a win-win, of course, and ArcelorMittal is a large client. But this is pretty interesting. So one more very interesting deal between an IT company and what is not necessarily a new age industry, but trying to fortify its technological or digital presence. So it's pretty interesting deal, and should do well for Infosys. Yesterday, Apollo Pipes was in focus because Motilal Oswal as a house did a call for Apollo Pipes with their investors. And just before that, of course, Sage One Investment Advisors, which is run by Samit Vartak, bought about 70,000 shares. Now, remember, Sage One has bought into Apollo Pipes earlier at a price of, I think, 700 or thereabouts as well, or maybe lower, but around that level. And they have added on about 70,000 shares to their position. So that's a pretty interesting one. Let's see if Apollo Pipes is in focus. If it reacts, there could be two reasons. One, this Motilal Oswal meeting that they did, and of course, Samit Vartak buying shores of that confidence. So watch out for Apollo Pipes. Watch out for a bunch of other mid-cap names. The Valiant Organics, again, moved up in trade, had some fairly decent delivery action. This is a part of the RT Industries group, so group stock, so keep in mind. Prism Johnson, India Cements, and cement companies have been doing really well. India Cements no different. And yesterday, out of the blue, Natco Pharma had a pretty interesting run. So that's the other one that you got to keep in mind. Just a couple of brokerage notes that I'll just lay it out, viewers, for you. I think I was talking about Infosys. So Antique Stock Broking has come out with a note on Infosys. They raised the target price to 2020 from 1650 because they believe they've increased the multiple, by the way, to 32 times. So, we did this discussion with Cardinal Capital, Vikas Khemani, a few months back, wherein we were talking about the possibilities of why shouldn't IT companies trade northwards of 30 times. Now we're seeing the sell side starting to price that in. You never know, IT companies could trade even higher. So that is one. CLSA has talked about cement. They're saying that the upcycle is fairly priced in, but they've upgraded Ramco Cements to an outperform. So if Ramco reacts, you know why that could be happening. And CLSA also has a buy on NTPC with a target price of 150. So those are a few key brokerage notes that all of us should keep in mind as well. And if these stocks react, you know why they are. But I firmly think that IT and specialty chemicals remain the center point. Of course, metals. I mean, there is, as somebody said, pagalbanti out there in metals. So metal stocks are anyways doing well. But IT and specialty chemicals also stay focused. And watch out for real estate once this macro tech issue IPO is out of the way. I think that's a dark horse waiting to react. So let's wait and watch how that shapes up. But stay safe. Please stay masked, and please don't trade on WhatsApp tips. There's lots happening beneath, so try and understand that. Thanks so much for tuning into the Trade Setup. Have a profitable day ahead.